Let's talk to Tim Harrison. He's the head of wealth management at Linear Investments. Very good morning to you, Tim.
Morning, sir.
Right, Groundhog Day. Last week we were talking about the
Monday merger.
We had
It's deja vu. This morning you've got Cleppier coming in for Hammerson, outright rejection from the board of Hammerson, which is an interesting call. Consider the fact that Hammerson are in the process of buying Into, and Cleppier have said that they would like to buy Hammerson without Into. So it's a case of toing and froing, but they have said just rejected the offer moments ago. So Hammerson shares have actually held up quite nicely. So it's an interesting marketplace, but again another big merger deal put on the table to start the week.
Right. In terms of markets, the week ahead, okay, is it still political?
Well, we're soft this morning, which I would suggest is probably a read across from what happened over the weekend with regards to Putin, Russia, and the whole sort of effect that could have, another term, etc. Interestingly, you've got Barclays, the bank, British bank, trading higher this morning, despite the fact that the FTSE is very much softer on the back of Sherborne picking up a stake of over 5% in the company. I wouldn't suggest that's an M&A deal per se, but what it is looking to do is get the bank into a ship-shape position if they can. So that's definitely one to watch out for on the financial front.
Right. Obviously, the markets have rallied since the tricky period in February. In terms of asset allocation, are you still cautious?
Yes, and I think we are being proven right in our lack of over exuberance over the last couple of weeks. Obviously, the US markets have rallied back to near give or take where they were pre correction. The FTSE European markets have underperformed if you're looking at that as a performance metric. But again, the FTSE trading around about the 7100 level, it does look as though you may want to see it break down a little bit more before a relief rally and a maintenance of the status quo may set in. This week you've got some important economic data to look out for, announcements on the announcement front, which may drive the market higher or lower, but we wait and see.
Understood. And finally, any companies you've got an eye out for this week?
Well, the main ones to watch out for, I would suggest, are really sort of punty stocks, if you like. You've got IQE report tomorrow. Now, obviously, they have been shorted by two significant names. And obviously, the news over the weekend with regards to Apple looking to change their screen manufacturing to in-house away from Samsung. It looks as though IQE reporting anything slightly optimistic, and you could see the shares jump. That being said, if Apple are looking to step away from third parties and bring everything in-house, these sorts of companies potentially, unless they find another revenue stream, their days are numbered. In terms of other companies to look out for, you've got Vectura, another one that's been spouted around as an M&A target, and then finally Bellway Homes, which on the back of Barclay Group's figures on Friday, it will be interesting to see how the smaller, more regional housing plays are holding up and where they see the market going.
Tim, excellent stuff. Talk to you same time next week. That's Tim Harrison from Linear. Thank you.